Can Synthetix 100x? Let's discuss it. It's 2021 and the gains are in full force in the crypto space. We've seen massive new all-time highs for most cryptocurrencies in the space, with some altcoins seeing 100x gains in just a few months. Most top coins have seen at least 10x gains from the lows of March, with Bitcoin currently sitting at around 50k after a recent correction. Since Bitcoin has been stalling out, a lot of money has been rotating into other projects, and many altcoins have seen massive gains because of this influx of capital. With all of the recent institutional investment also getting into the cryptocurrency market, it seems likely that the bull run is set to continue for a good few months yet. It's likely to end around September time when the bull run will hit peak euphoria, and in the final month or so the gains will reach incredible heights. Smart investors would always take profits on the way up and way down as their investments reach certain targets, because large fluctuations in the cryptocurrency space are extremely common. In previous bull runs, the gains upwards are parabolic but usually takes months to accrue, but once the true bear market hits, the losses on the value of the cryptos could drop in a matter of days. In this video, we'll be discussing how Synthetix can 100x in the future, based on the incredible fundamentals of the project. Make sure to watch the video till the end for all the essential information. This is not financial advice and is for entertainment purposes only. We always stress that you do your own due diligence. Please like and subscribe. Welcome to Crypto Maximalist. Let's begin. Synthetix is a project that has an incredible amount of potential in the future. In all cryptocurrencies at this channel, we look for projects that have the two essential pillars for success, which are a clear use case and adoption. The use case of a project is essentially the problem that it is designed to solve, or the solution that it provides via its utility. The adoption of a project is how much it's being used for its use case, which dictates the value of the network. These two factors are incredibly essential for the success of a project and dictate whether or not it will be a success in the future. If a project has a clear use case and provides utility, it gives it a very good chance of being a success. In this regard, Synthetix has an amazing use case, essentially allowing users to mint tokens that track underlying assets one for one, meaning they can speculate on virtually anything. This technology targets the derivatives market, which is valued at anywhere between $600 trillion and $1.2 quadrillion. Synthetix has massive potential to be a huge player in this market in the future, which could see its value skyrocket from its current $2 to $3 billion market cap. Adoption for Synthetix is already very high, with it being a top 50 cryptocurrency for some time now, and if it continues to see use for its utility, its adoption could increase substantially in the future. Synthetix is one of the best positioned cryptos from the recent DeFi boom to take advantage of this truly insane market. Synthetix aims to take advantage of the derivatives market through the use of its token system. The Synthetix protocol essentially allows users to mint tokens using the Synthetix token to track any asset that they want, through the power of Chainlink's Oracle technology giving live data feeds to synthetic tokens. This allows humans to do one of the things that they enjoy doing most in markets, which is speculating. The derivatives market is essentially all based on speculation, and this is exactly what a derivative is at its core. Derivatives are essentially contractual agreements between two parties to speculate on the price movements of an underlying asset. When someone usually buys a stock, it's a derivative or a product of the underlying asset, but not the asset itself. This is the same as the system that Synthetix has created, which mints tokens that track an underlying asset, and then the users can profit or not on the difference in price of the token from when they minted it. These tokens can be traded via their own dedicated DEX called Quenta to cash in profits. The Synthetix protocol allows users to gain exposure to traditional markets, but in the cryptocurrency space, and this concept has a massive amount of potential. It gives incentives for users to get into cryptocurrency, as they can still trade traditional markets, and may break down some of the walls or friction points that would prevent more traditional users from moving into the cryptosphere. The derivatives market is an absolutely huge market that Synthetix is targeting when you start to look and consider leverage. Leverage is another agreement between parties in order to trade with a larger amount of capital than is actually owned by the user. For example, if a user has $10,000 with 10x leverage, then they have a buying power of $100,000. This means that users can quickly amplify their results, good or bad. When you start to consider the economics of this, you quickly realize that this will most likely inflate the value of the derivatives market to an insane value overall, giving Synthetix a huge amount of potential to capture some of that market share. Many players in the trading world would use leverage, including hedge funds, to increase the amount of money that they can make using trading. Because even in standard trading markets in the world, people very rarely actually own the underlying asset they buy, the transition to Synthetix for derivatives is actually very easy, and there are countless benefits to using blockchain technology for these purposes rather than centralized exchanges. There are a number of benefits to using decentralized technology to trade with that are not necessarily considered by many, but the potential that it gives projects like Synthetix is truly staggering. The way to measure the utility of Synthetix is to look at the problem that it is trying to solve, and then see what utility they can provide in comparison to other competitors in the market they are targeting. When you look at centralized exchanges, you only need to look at the recent problems with Robinhood and other exchanges during the Wall Street Bet saga to see the many problems that users have in regards to centralized finance. Ultimately, the platforms they are using are a business, and the business will always protect themselves over their users if their platform is threatened. This likely seems to be the case with Robinhood, who restricted users from buying stocks such as GameStop under the pressure from hedge funds who were losing billions of dollars. Money always talks, and although not confirmed, this was the likely result. Other exchanges such as Trading 212 in Europe experienced such massive congestion that users could not even buy or sell any stocks whatsoever, and this is another issue which is extremely prevalent in centralized businesses. The technology that they use is often old and outdated, and they rely on the market makers behind the scenes who actually own the stocks with antiquated technology to run the show for them. Another issue with centralized exchanges is that they often have high fees to use more exclusive platforms, and almost always come with some form of deposit or withdrawal fee to steal some of the gains away from traders and investors. Combine this with many markets in the world being restricted due to geopolitical issues, and there are many drawbacks to centralized exchanges that are not often considered as a whole. When you compare these issues to Synthetix, you can see the amount of issues that the technology will likely solve for. In regards to potential arbitrary limitations being placed on users, this is impossible due to the network running itself. The blockchain technology is run and maintained by the users through validator nodes and consensus mechanisms, and the functionality of the network cannot be changed at will like with centralized exchanges. Because crypto is decentralized, the power lies with the community of users, not with one centralized party that controls the platform. This is an amazing innovation which will likely correct many of the issues seen with centralized power and how it can be abused, often to the detriment of users and to the benefit of the people running the show. Another example of how Synthetix is superior to centralized finance is the speed and power of its network. Once Ethereum 2.0 is implemented, Synthetix will be an extremely fast and reliable network with almost no downtime possible, and the congestion on the network in the future will be extremely unlikely. Because of the sharding coming to Ethereum this year, which is the platform Synthetix is built on, Synthetix will be a powerhouse in terms of speed and reliability. This seems to be a greater and greater issue in the derivatives market as it becomes more popular as time goes on. Access is another incredible utility that Synthetix brings to derivatives markets, because as with all cryptocurrency projects, they can be used and accessed by anyone with an internet connection. There are no restrictions on who can trade what with Synthetix, and this access could open up potentially billions or even trillions of dollars from parts of the world with little access to trading markets, giving a massive injection of capital to Synthetix if its adoption increases. When you start to look deeply at the fundamentals for Synthetix, it becomes apparent that 100x in the future becomes more of a question of when than if. If Synthetix continues its rate of adoption and onboards more and more users from around the world, the network effect and potential for Synthetix is truly staggering going into the future. If Synthetix 100x'd, it would reach a price per token of around $2,000 with a market cap of around $250 billion. Whilst this seems unlikely at this current moment in the market, when Bitcoin is likely to reach $3 to $5 trillion this year, a market cap of $250 billion for Synthetix is definitely a possibility, especially considering the fundamentals of the bull run for the remainder of the year. So what are your thoughts on Synthetix? Do you think it will reach $2,000 in the future? Let us know in the comment section down below your price prediction for Synthetix in the future, and your reason why you aren't bullish on the project. We're always interested to know what you think. If you'd like to support the channel more directly, you can sign up to our Patreon via the link in the description below, where you can get access to our private Discord. Please like and subscribe. We are Crypto Maximalists.